congratulations. And Muslim is going to be taking us through a few of the pointers before we actually set stage again for a panel that is going to be digging deeper into that. You're most welcome, Rosalie. Just kick it off. Thank you.
All right. Thank you so much for having me. It's my pleasure, my honor, and delight to be part of today's discussion. Just by way of introduction, I'm Rosalind. I'm an economist, currently the Director of Growth and User Acquisitions at Pesabase. Pesabase is a remittance startup which is focused on the East Africa and Australian corridor as a beginning target market, and of course looking to serve the African market at large and connecting Africa financially as our vision. Pesabase was founded in 2017 and as at last year then built on the Celo platform, which is built on blockchain technology. And that is critical to mention simply because Celo is one of the partners which are leading the mobile ecosystem in terms of applications which serve the mobile economy, which is really critical to Africa. Now, as an economist, my focus in the emerging technology space began in 2017 when I developed an interest in the changes and trends in emerging technology. I felt that I personally had not acquired enough skill to be part of the fourth industrial revolution. So I thought that by way of getting a master's degree, then I would be positioned to get the skills that I needed. However, after a few forums that were organized at the time, between 2017 2018, I got to understand key focus areas and key concerns within the crypto industry and the blockchain ecosystem, both in Kenya and in Africa. One of them was that a lot of young people were falling prey, and not just young, but also elderly, who were falling prey to scams, which had promised quick returns, huge gains, and a lot of people had put in their life savings. Therefore, you ended up with a situation whereby there's a new asset class which has a lot of promise, and that was seen with the cryptocurrency boom between 2017, especially late 2016 getting into 2017. So here was something that held a lot of promise and potential, but at the same time then, since the scam platforms had taken such a leap and bound and gotten so many people involved, then for it was unfortunate that for so many people then that their first introduction was through scams and then losing their money. Therefore, for anyone else to come and hear about alternative investments after that, it would be primarily a disappointment. Now, there were a lot of concerns in the sense that the government had issued a cautionary notice on investing in digital currencies. However, there wasn't enough education on the ground for people to understand and therefore be able to dismiss a scam based on certain parameters. Within my research, I was able to establish then there was such a huge gap in terms of the knowledge, the awareness, and enough confidence even within traditional forms of investment or conventional investments such as stocks and mutual funds. Even getting into futures, derivatives, and forex, right? Therefore, introducing a new asset class in this then would require some level of financial literacy. I took up then an interest in developing educational material, content, articles, and I found that that would be my effective way of having a starting point within the cryptocurrency industry. So, by way of introduction, then you can identify some of my key passion areas within the blockchain industry as connection in terms of, basic awareness, education, financial literacy, and being able to identify which partners are then operating within the best possible frameworks. So those are some of the first issues. In 2018, 2019, 2020, then I've observed growth within the blockchain and cryptocurrency industry in East Africa through a few leading companies which have established a community. They've put out a product or at least a service and put in quite a lot of work to lay in the basic infrastructure. So for anyone who is wondering, then what is the state of blockchain and cryptocurrency companies slash the industry in East Africa? It's that it's a budding industry. We don't have more than 50 companies, for example, which are in different use cases for both cryptocurrency and blockchain initiatives for two reasons. First is that on the technical challenge you on the in terms of technical challenges, internet connectivity, a lot of users who connect to the internet, particularly in East Africa, then are you will find them mostly concentrated in urban areas. Yes, for Kenya, for instance, we have about 80% internet access in terms of connectivity. However, in terms of access to quality, strong, and fast internet, when we talk about 3G, 4, going 4G, 5G, then a lot of people are yet to be connected to that. And now, considering that a lot of cryptocurrency and blockchain applications do require an internet connection, you can see part of the disconnect, how part of the disconnect comes in, right? That is one of the challenges. The second challenge is that a lot of these companies are startups, then do not have the funding, the traction. They don't have the mentorship. They don't have the wide reach again. So it becomes a bit of a cycle that you don't have the funds to build the community, and yet you still need the community to attract funding. So it's I hate to say the word catch 22, but it's a bit of a cycle then in the initial stages of the building of the industry. So within these 3 years then this you would say that there as you would say, there are many opportunities. Of course, the technology, and if I may just pause to define what is blockchain, what are cryptocurrencies. Blockchain technology as distributed ledger technology basically offers you a database which is tamper proof. And in this database, you have a history of transactions, right from the first transaction to the most current. And anyone who wants to add transactions to this database then must follow certain rules and must go through certain approvals for their entry to be approved, right? Now, in this then simple explanation, you can understand why such a technology is so valuable. And its value is in simply the fact that it's protecting information. Now, blockchain technology in its conceptual stage then applies to industries where you need information protection. So whether you want to talk about copyright, whether you want to talk about land registries, talking about health data, talking about protecting educational certificates. These are some of the clear wins for such a technology, because you do not want such information to be tampered with. Healthcare information, that's pertinent, that's private to every patient. Land registry, you don't want your land title to be claimed or counterclaimed by someone who does not own that property, right? This extends even to assets in terms of capital markets. So we are at a point in time where we have such an incredible promise through this technology, and at the same time, then the technical aspect is present then for users to actually explore the potential of it, for entrepreneurs to build upon it. Then, on the other hand, in terms of challenges, you have a skills gap. We don't have enough developers across the board who can put their time into these projects, but then you have many of them who are learning on the job, many of them who are comparing and learning and borrowing both insight and not really borrowed expertise, but what I'm driving at is that they are actually just getting the insight from their peers around the world to build. Now, I'd like to take us also just back in time for perspective that in the initial stages of the internet boom, where a lot of people then had so many ideas to launch on the internet that you thought you could build anything, release anything, have it profit, and well, it was the dot-com boom of the time, and there were those who felt that the internet would not go past a certain level. It would be a bubble that would burst. And true to that, there was a burst in the between late 90s, early 2000s, and a lot of companies did go past at the time. However, those that were able to build in the aftermath with the lessons and perspectives are some of the currently known internet giants. So in parallel to that, with blockchain technology, yes, it holds a promise of tamper-proof record keeping, tamper-proof security when it comes to especially when we're dealing with our data online. And that's a whole conversation for another day. But what I'll mention from that is that we have an interest in cybersecurity. We have an interest in data safety, data protection, data privacy, which are pertinent issues. Now, using blockchain technology is one option of those that are available or in development for the protection of our information. Now, these, as I've laid, the founding blocks in this conversation are that we have a technology which can actually protect our data, right? Blockchain. We have potential use cases, one of which are cryptocurrency and, as I've highlighted, healthcare, land registries, education, and several other use cases. At the same time, it's not a perfect technology because, well, there are other platforms that are available. However, this as one is critical because it's unlike any other, and it combines quite a number of features. Now, it's not, as I said, ready to market to the millions of users because of internet challenges. So you do need partners and ecosystem builders who will step in and bridge those technical gaps so that the user's experience at the end of the day comes to the fore. So that if I have a basic feature phone, cannot access internet, or I just have a SIM card that I'm sharing with probably my sibling or my parent, then I should be able to access these services one way or another. And that's the beauty of innovation, that these applications, even as I speak, are either in development or testing. Some have already been released, right? So we have this promise, we have this potential, which is great. So how does regulation come in, and how can we appreciate now the regulatory landscape in East Africa? So back in time, right around 2015, between 2015 2017, the government bans or cautionary notices are widely pronounced or publicly announced in East Africa, West Africa, even South Africa. And the bans or the cautionary notices then create, of course, fear, which is expected because how can the ordinary investor consider an asset which the government cannot protect? So that level of confidence was missing for a lot of people. However, peer-to-peer education steps in. And in this, then you have either companies or communities or simply individuals, experts who some are volunteers, some have found their way of monetizing, this information in their spaces. Then step in to educate. They set up the classes. They set up Zoom forums. They set up public forums, and especially between 2018 and 2020, then a lot more education is out in the public domain, right? So in as much as then there hasn't been outright regulatory support for this budding industry, it's that it does not stop, it does not curtail the promise that these technologies hold. My personal view is that cryptocurrencies are a tool simply to help us, understand or appreciate the initial principles of blockchain technology, and they're not the end, literally, of blockchain technology. As I mentioned, then there are other applications. So, what should regulators consider? What should investors consider? What should entrepreneurs consider? This will be the basis of my closing remarks as I try to just bring a simple action and takeaway from these thoughts that I have shared. So I begin with entrepreneurs. Entrepreneurs are a vital part of the crypto and blockchain ecosystem in East Africa, simply because they are the ones on the forefront of solving problems for communities. They're the ones on the forefront of, linking technology to present world use cases. So my call to entrepreneurs is keep innovating, keep building, bring developers on board, define these technical terms and these technical concepts into usable products, into usable services, because you are the ones to make it easy then for the masses to understand how the usability comes in. In speaking then to investors, I'll say, do not fear to invest in emerging technology initiatives or products and companies, simply because these are the beginning stages. Yes, we are yet to see sustainable parameters for defining return on investment. That's ROI, which is one of the key things that investors are looking at. However, you need to consider then the impact over time. Patient capital, have the foresight to see where this industry will be in 5 years, in 10 years, in 20 years, because in the same way that the internet boom could not have materialized even in a decade, then we have seen really incredible gains in 20 years. How much more then will come from the from the emerging tech industry with blockchain and cryptocurrencies 20 years to come? So my call to investors is to see where this tech will go into the next decade or two, and to be strategically positioned then to partner with companies and communities that are working on clear specific use cases. Yes, do not buy the hype simply because as it is in the public domain that the cryptocurrency market is currently going through a dip. That's all right. Any market will actually face that, whether it's on stocks or forex, or for reasons that are really not limited to one asset in particular. So I will say, do not be afraid of the dip. Do not be pushed away by the uncertainty. Build for the long term, because that's where the true value is. Um, my call then to individuals and communities who will listen into this talk is, to the best of your ability, seek to learn what these technologies hold. Your opportunity then as a community might be, being able to partner with companies or entrepreneurs then who will offer solutions that will make trading easier for yourself as an individual, or for your business as one that's looking to launch within Africa and across borders. You want to be in a position whereby you can receive payments and make payments without having to create multiple accounts, use multiple lines. It should be seamless for us. And cryptocurrencies do hold that potential for us. So my emphasis, especially to individuals, learn as much as you can. Ask the questions that you can. Do not be pushed into feeling like you are missing this revolution. Indeed, you will have your learning journey, but do take your time with learning, right? Because that is your strongest advantage against the scams that are likely to, come up within the space. And lastly, but not least, to regulators and policymakers who are listening into this session, it's that the blockchain and cryptocurrency landscape is extremely nascent. I mean, less than 20 years. I mean, the first 10 years have had quite a lot of trends. There's a lot to see, there's a lot to find within the space. However, since within the cryptocurrency and blockchain landscape in East Africa, we are yet to have the first 50 million users, the first 100 million users, the first billion users. It's that do not stifle innovation by then stiff policies and stiff measures that would be instituted, right? Yes, your burden or your responsibility as a regulator is to protect and to ensure that there's stability, which is great. Now, in that case, I call for invitations to roundtable discussions and sandboxes whereby policies and products, services can be tested within an exploratory space whereby both private sector companies and private sector companies and public sector entities will interact in an environment without much pressure, and really looking again at the long term, as I mentioned to investors, that you're looking at an asset class that could bud quite well for the next 20 years, offer income opportunities, protect against and hedge against the inflation. It's not all rosy, definitely, but over the next 20 years, I believe that a lot of wealth could actually be generated from the crypto and blockchain industry for Africa in the next 10 years. So let's not be held back then by the negative press and the negative events that have transpired within the cryptocurrency industry in the last 10 years. Let's look to the future, shape it, and build for our communities, because that's where the greatest and I believe most powerful value for us lies. So crypto and blockchain are tools. The fact is that, or the greater thing is that we actually have a platform to link our communities as peers without without much of a hassle, that simply from my mobile phone, simply with an email address, anyone can be a participator in the digital economy. It being in the early stages, let's learn, let's share, let's collaborate, let's educate, and let's build for the future. Thank you so much for your time, for listening to my thoughts. I'm ready to receive questions or comments. Mathani?
From the chat session, I cannot see a question. No comment as well. So unless they escalated, none at the moment. I think from this point on, I think we can move on to the panel. To the panel now.
All right, thank you so much.
You're most welcome. If I can have the panel who is next in session, the panel on regulatory environment, kindly. Just unmute yourselves, kindly. Kindly just unmute yourself and have your videos on. Louis, as we wait upon you, I'll just do a brief introduction to this particular session. My name is Modoni Njogu, and I'm the managing partner of Njogu and Associate Advocates. It's a corporate commercial law firm here in Nairobi, but also with a very key interest in the fourth industrial revolution technologies, and in particular, blockchain and cryptocurrency. I will start off by the panelists introducing themselves. I think there's a whole body of of your profile, so I will let you do that for yourselves. Then you can introduce yourselves, and then we can proceed from this particular moment on. Thank you. We can start off with you, Violet. Thank you.
Okay, thank you very much. My name is Violet Mahoro, and I currently work with the National Bank of Rwanda as a data scientist. And I'm also part of the blockchain community group here in Rwanda, a platform where they bring awareness and sort of like what's going on in the blockchain space and community in East Africa and the whole world. And there's also, yeah, that's pretty much it.
Thank you. Thank you, Violet. Mr. Yanga?
Well, thank you so much. My name is Nyale Yanga. I work for Capital Markets Authority Kenya, and in the role of market supervision. Previously, I used to be in the corporate approvals department, where I was in charge of gatekeeping and approving all the products which come to the market. But in addition to that, I also chair the Sandbox Review Committee. In the capital markets space, we have a regulatory sandbox, and our role is to nurture evolving technologies, to give them some regulatory space so that they can showcase their innovations before they roll out to mass market, as well as inform policy development to ensure that whatever then goes to market is fit for purpose. It has the business case that is envisioned, and to ensure that we develop evidence-based regulations and policies. Thank you so much.
Thank you so much, Mr. Yanga. If I try to pronounce your name, Gatechu, I think I'll be sued, so I'll leave you to introduce yourself. Thank you.
Yeah. Yeah, I could imagine it's a bit a longer name.
Yes.
So my name is Getachew. I'm based in Addis. I'm an advisor for UK Aid or the British Embassy in Ethiopia. So I mean the British Embassy in Ethiopia is closely works with the Ethiopian government on different economic reforms, including financial sector reform. So I advise Ethiopian government agencies, including the central bank and other agencies on financial sector development issues, such as capital market establishment. Now, you might have heard already from the news that Ethiopia is attempting to establish its capital market. So I am closely working with the National Bank of Ethiopia in terms of like establishing the capital market. There's also a lot going on in terms of the regulatory reform in Ethiopia with regards to the digital payment system in the country. You might have also heard that there is a liberalization effort of the telecom space in Ethiopia. And it's only recently, last week, that the National Telecom also started a new mobile money platform. So there is a lot going on in the digital payment platform in the country. So I closely work with the National Bank of Ethiopia in terms of like policy reforms related to creating more business-friendly, enabling environment for startups and better interoperability between financial institutions and really adoption of new digital instruments for better facilitation of the real side of the economy. So that's basically what I am engaged in.
Thank you so much. Louis, we can hear you, but I think we cannot see you on camera. If you could kindly unmute and have your camera on. As we wait for you to do that, I think Rosalind can go next, kindly.
All right, thank you. Just by way of mentioning, I am the Director of Growth and User Acquisitions at Pesabase. Pesabase is a remittance startup which is focused on the Australia to East African corridor. We built on blockchain technology and proud to have Selo as our partner, ecosystem partner, in offering the basic infrastructure. Our vision is to connect Africa financially, and I'm delighted to be part of this panel.
Thank you so much. Thank you so much, Rosalind. Louis?
Hello, can you hear me?
Yes, we
Yes.
can hear you loud and clear, but your
Yes,
video
yes.
needs to be on.
Yes, I am where I am. As I said, I must apologize. I'm really on a national assignment. I'll be entering a meeting briefly, but I had to honor this because it's very important to me. I just want to greet everyone. I would appreciate this. My name is Louis Yaafo, and I'm a trade practitioner and executive director for After Policy Network Group. We focus on continental free trade, investment, and the women of Africa. Briefly for now, let me put my introduction this way.
All right. Thank you so much. Thank you so much, Louis. So today's conversation, we're going to be rotating around the regulatory environment for digital currencies and, of course, the infrastructure of cross-border trade. There was the research that was undertaken by Luno, the exchange, the cryptocurrency exchange, and Acne research body. And one of the key issues that they were highlighting from a continental perspective was the fact that Africa shares a couple of things that are quite similar. We have high inflation rates, we have, volatile currencies, hyperinflation, financial issues, capital controls, and all that. So it seems to have a problem that is permeating around the continent as a whole. So in one of their recommendations, which was very key, was the fact that cryptocurrencies or digital assets are going to position themselves to become the ideal antidote to all these challenges. So from that perspective, having understanding that Africa has a problem, we wanted to understand what is this catalyst for change that has come. What is the regulatory environment that has been currently as it stands? And over and above, I think there was a session before by Rosalind and saying that we are not talking just about cryptocurrencies. We're talking about progressive technologies that have come with the fourth industrial revolution, like blockchain. So the question becomes, what are all these other, ideas or these other technologies that are bringing on board, as opposed to just the currency bit about it? Kindly, would start with you.
For me,
Yes, Louis, we can hear you.
Yes, I will speak from the perspective of a trade practitioner and from the African Continental Free Trade Policy direction.
Yes.
A blockchain cryptocurrency is very important. I think Africa has wasted too much time the Asians have gone beyond our stage because most of our central banks were not ready, especially with cryptocurrency. And I'm happy that in Ghana, we are now ready. We have, look, over 12 years ago, when the youth in Ghana knew cryptocurrency and they were encouraging people to take interest, most of them are millionaires and billionaires now. It is now that the regulatory authorities are interested. We always lag behind in terms of our ambitious plans. And I don't know what kind of research normally we want to do to waste so much time. But this time we should have been in place with the Asian tigers when it comes to cryptocurrency and blockchain. But I'm happy that the African Continental Free Trade that seeks to bring the continent's trade liberalized and integrated has trade in services, the protocol on trade in services. And trade in services is looking at communication, information technology. And this is going to feature the next other phase of the Continental Free Trade has to do with e-commerce, digitization, trading. And e-commerce, you're going to have all these blockchain and cryptocurrency very, very key because this is where the world has moved to. This is where the world has moved on. And so it is important that most member states start looking at their infrastructure funding. Most member states have to now look at how to integrate it officially in their system. It is time for most payment systems to align themselves with these two systems because fiat money, be it as it may, is losing its value at a faster speed. Fiat money is losing its vitality at a faster speed. And this is the digital age that we find ourselves. And so I am happy that the Continental Free Trade, Ghana, for example, is going to regulate cryptocurrency. African Continental Free Trade, as part of the Agenda 2063, are looking at one currency after one passport. Now, that one currency, they must have blockchain and cryptocurrency as core to these negotiations. It should be part of the negotiation table because if we are going to have one central bank because of one currency, that central bank should be able to regulate cryptocurrency and blockchain across Africa. It is time for us to have our unique payment system. I'm happy, yes, that there is a new payment system called the Pan-African Payment System. But the Pan-African Payment System, I tell you what, I did an investment on e-commerce, and look, the company has changed my interest payment away from fiat money. And those people who have no knowledge of cryptocurrency are in trouble because they don't know how, because now the company is deciding to pay in bitcoins or in crypto. How will the ordinary person who doesn't understand this get the returns on his investment? We need, as a matter of urgency, to really take a serious regulatory bills and laws into making it, formalizing it across our nation. So I'm happy that the Continental Free Trade is currently negotiating. They are on the negotiation table on e-commerce. And I know by the end of the year, we will hear a positive news of where we position this to, because we need blockchain in the area of our transports. It is about time. We need our transport systems all fitted in this new technology. Without transport, trading will be very difficult because of trade facilitation. In terms of communication itself, we need blockchain technology. So for me, I would like to, before I wrap up, I would like to say that we should continue to push this agenda, voice out to our legislators, to our legislative houses, come out as one voice for them until they pass laws formalizing these. Time is over doing this behind the scenes or black market. If you go to some countries, they cannot trade because it has not been formalized. The days are over of keeping this cryptocurrency blockchain technology as something that is left for a few. No. And so I think this program is great. I would like to encourage all my panelists. We should move beyond here as having this program, put whatever we discuss together, come on with a communique to appropriate authorities and push beyond this. I would have loved to stay for more, but I have a national assignment and I have to move in within the next 2 minutes. So I want to thank you for inviting me, but my doors are open. I've left my contact there, and let's move beyond. Let us have another session and look at when we had this one, what has been the result? How far have we pushed with this webinar? We should have a second one and know how far we have gone with it. I want to thank you for this opportunity, and my apologies.
Thank you so much, Louis. And before we let you go, given the fact that you work with the African Free Trade Area agreement, just how far in terms of policy within this particular space has that gone since the operationalization of it in January this year?
For me, I run a largest network for continental free trade. The difference is that I happen to be among the consultative team who drafted this agreement along the line. For now, I can say that negotiations are underway. I think they are closely about 60%. They want to fuse all together. In fact, e-commerce was to be phase 3, but because of where COVID has taught us a lesson, we are putting together e-commerce, putting together competition policy, putting together investment as one. So by the end of this year, the countries would have accepted the negotiations, and then it will be formalized for the agreement to be adopted by the heads of state. If not the end of this year, early next year, God, in 2022, I'm sure by January, they should, the heads of state will adopt it. But currently, state of trading, I'm saying that current state of trading, it's not so good because only few countries, if you take Ghana, only 2 companies have shipped goods under free trade. And I think that when e-commerce is negotiated and people are trading through e-commerce, that will move more even faster than the usual tangible trading system. And so if you ask me about the state of trading now, I think that we have not gone too far at all.
All right. Thank you so much, Louis. We hope to have you next time for this particular discussion, and definitely we'll take up your advice that after this discussion, we need to probably collate information and move the agenda forward. Thank you so much for your
Thank you
time.
very much for having me, and thank you. Congratulations to all my panelists and all my listeners. Thank you.
Thank you. To the rest of the panelists, I think there is one thing that Louis has pointed out. He has pointed out that I think the continent is sleeping, and there's some point where the lack of regulation is probably acting as a choking point for embracing of this technology. Just to go back, what is the stance from your various respective even countries, how regulation is looking like towards this particular technology? Violet from, I think we can hear something from Rwanda. It's a very progressive.
All right, thank you very much. I will be speaking on currently what the central bank has put out in terms of testing digital financial products. There's currently a sandbox that was I think approved in 2018. That's about 3 years ago. And it's currently in operation where firms or even individuals that are putting out products on the market, products that are obviously different, that are bringing innovation, that are user friendly, they're allowed to test for a certain period, and once the product has met all the requirements or has passed the test, and they are allowed now to launch on into the market. So that's Rwanda's standpoint currently on the opportunities that are out there in terms of digital products and how they can allow them to be launched into the markets. Another thing is there's currently the Rwanda Central Bank also launched the ICBT survey that was back in 2012. It was confirmed, and it was mainly operating in 17 official borders of Rwanda, and we've currently seen sort of growth in terms of exports and imports. And I think for the fact that Rwanda is already on that progressive side of the trade, I think it will be easier now launching into the African continental free trade area. Yeah,
Okay.
thank you.
Thank you. Yanga, I will throw it to you. Desiree and Julius on the same, and Gatecho, I'll throw it also back to you as well.
Well, thank you so much, Modoni, and thank you for having me. As I said, I work for the Capital Markets Authority, so that is in the capital market space. But I think innovations and facilitating innovations as a regulator, that is one of our key focus areas as Capital Markets Authority in the Kenyan space. And we want to see as many innovations as possible come to the fore. We test them in our regulatory sandbox, which is now 2 years old, to see what then that can come out in terms of the viable products into the future. But when we talk about the blockchains and the cryptocurrency, I feel we concentrate too much on cryptocurrencies while there are so many use cases for blockchain technology. And I would want for a minute we forget about cryptocurrencies and let us look at what are these other use cases for blockchain technology. Look at tokenization of assets, for example. Look at how blockchain can be used to do intermediation in terms of buying and selling of securities in the securities exchange. Look at what, for example, Rosalind talked about in terms of land registries, in terms of eKYC processes, in terms of so many other use cases. So let us open up in terms of these use cases for blockchain, not just cryptocurrency, because that usually is the focus in many discussions. When we talk blockchain, then the next thing is cryptocurrencies. That is not doing the blockchain or the underlying technology itself a favor, because we constrict our mind to just a very small subset on what blockchain technology can do. Now, back to what we have done in the sandbox in the Kenyan space. Of course, we allow innovators to come and test their products in our capital markets sandbox. And we are not just looking at the blockchain as the technology to be tested, but you need to use the blockchain technology to solve a certain problem in the capital markets. What are you using technology to achieve? What part of the capital markets value chain are you plugging in to make the process more efficient, more simpler, more cost effective, for example, and things like those? How using blockchain to intermediate the buying and selling of securities. So that is what, as a regulator, we are interested in. I mean, there's a lot of talk about the technology, but when we come to assess a certain product, it's not about the technology. The technology is out there and it can do quite a number of things. What is this thing that you want blockchain to use to do for you that will solve an actual capital markets problem? What value addition are you bringing into the industry? What problem are you solving in the current chain of buying and selling of securities? What are you solving or making efficient in intermediation, for example, in the capital market space? And that is how we look at these innovations. It's not about the big words and what it has done and everything, but the test case. If you use this technology to solve a certain problem, can you scale it into the future? Can it make business case? Can you make money as the business person? Because you're not just innovating for the sake of innovating. You also need to make money as a person, isn't it? Can it be able to thrive businesses into the second, third, and fourth frontiers, for example? And so we're happy in our sandbox to have received the various applications which are using blockchain technology to solve certain problems, and we are testing them in our sandbox. One of it, two of those have moved out of the sandbox, one not necessarily on blockchain, but we have some which are in our sandbox, which are testing various test cases using blockchain, not cryptocurrencies, but blockchain, because that is what we are interested in, the underlying technology and what problems can it solve. And so when you talk about regulatory approaches, regulators, and I'm not speaking to all regulators, but regulators don't regulate technology. They regulate the products which are being brought by this technology. So forget about regulating blockchain, regulating the technology itself. The technology is a technology, just like you have Word, you have Microsoft Office, it's a technology. What are you using that Excel functionality to solve a certain problem? And that is what needs to be tested and proven that actually it can assist in the solving problems for the society, solving problems in the capital market. And that is what, as a regulator, we're interested in. So, of course, when people come, we look at them, they explain all this, but then we handhold them to tell them, use the technology, that's fine. We don't have a problem with the technology, but what are you using that technology to solve what problems, to add what value in the system? So maybe I can end there for now as we discuss.
All right. Thank you so much. Gatacho, I think I just want to borrow from what Yanga has said. There seems to be an obsession between, cryptocurrencies or virtual currencies with the blockchain technology. I think yesterday there was a whole hula baloo. The whole market had gone to what we call a bloodbath. But we are not here. I think Rosalind had intimated that we are not talking about the cryptocurrencies in exclusive to the technology itself. It has a lot of potential, a lot of potential. Maybe you can speak on that, those potentials that the technology brings about.
Yes. So for me, the issue has the issue and the discussion has to always be about the real problem, the real problem that needed to actually be solved on the ground. I mean, as a continent, and as you know, most of the countries that we live in have serious problems, of social services, serious problems of economic opportunities, serious problems related to economic growth and potential for economic growth and so forth. So there are shortcomings, there are developmental shortcomings, and there are services and there are services that our communities need. So I think the whole issue has to actually be what sort of problem is this going to actually be solving out of the plethora of challenges that our communities really face. And the issue is, with these technologies and other technologies, I think there is this fondness and sensationalization of the technology itself, instead of actually the kind of problem that's going to be solved through this technology. So the skepticism, the conservatism of our most of the regulators that I closely work with come from, on the one hand, they have this communal interest they need to actually guard. If it's a financial sector, for example, you have huge number of depositors and buyers and sellers and investors that are involved in the space. So these are all interests actually that needed to actually be protected from any volatility. Regulators are always interested actually to
You are on mute. We can't hear you. You're on mute.
I accidentally muted myself. So
okay.
Regulators are mostly interested in terms of on systemic stability. You know, that they really want to maintain, whether it's a financial sector or whether it's a particular sector of the real economy, they really want to maintain stability within that sector. So regulators want to make sure that they really have the kind of understanding of that particular technology that is involved, and the overall system, the overall economy is also stable enough. So as much as we are really fond and very much excited about what this technology could actually bring, we need to actually understand the concerns of the regulators too. And that's why regulatory sandboxes could actually play a role in that. In a way, within that sandbox would have actually a time and a space and an opportunity to kind of taste those instruments and see where risks are coming from. I think in that regard, most of African governments and regulators are really becoming more open to try things out and to learn how things are evolving and what sort of risks are coming from the different aspects of transaction, and what sort of instruments could actually protect the different interests involved in the market. So I believe that as much as we should actually be fond of the technology itself, we also really have to be empathetic about the kind of societal problems that the technology has to actually solve, or is meant to solve. And I think we really also have to understand the perspective of the regulator.
Thank you. Julius, I just want to come off from what Gatesho has said. And he said that over and above the opportunities, the regulators are becoming more open. Do you agree with this statement?
Okay, thank you, Madhoni. And it's unfortunate that somehow I fell off during the introductions, but I was followed, and I think there was a good presentation by Rosalind, which I really liked, and brought out the many issues. And thank you to be here. Just so that you know where I'm coming from. I'm working. Well, I've been working with Africa Center for Economic Transformation, a think tank based in Accra, Ghana, but I'm also with the Maastricht School of Management in Netherlands. And I've been working on this area. We've done some report on the post-industrial revolution in Africa. We did a big report for Africa Development Bank, trying to understand readiness of African countries and what they need to do. And obviously, blockchain is one of the technologies that we did look at, and the opportunities there. And regulation obviously becomes important in terms of how ready we are in Africa, because apart from skills and infrastructure and also innovation, which you need, you also need to regulate better. But following from what I've heard and what Gatesho has said just now, when you think of regulation, and he has talked of what are the interests of regulators, really, that's what matters, and obviously about regulating products that Nyale has raised. But one thing we also want to ask ourselves, the reason for, first of all, coming up with this blockchain technology was actually because the regulation had failed, isn't it? Because blockchain technology is really a way of bringing trust. And traditionally, trust came from governments, because the regulatory area is to build trust so that we can transact with each other. And also companies, basically a corporate is basically a trust mechanism. It's basically a trust technology. Because before, in the old ways, I could trade with my neighbor, but I have trust in my neighbor. I have information about my neighbor. So if he sells me something and there is reputational risk, there I can trade with him because we know each other. But if I'm going to trade with somebody who is far away and so on, I don't know about the quality, I don't know about anything. So the company came to create that mechanism for us to trade with another person. That's what a company does. There's somebody with a good somewhere and somebody with another somewhere brings it together and gets to a consumer. But once that trust breaks down, and I think it came from I think the collapse of the 2007-8, I think financial collapse actually created the impetus for this system for creating a different way of creating trust. And the whole idea was really to be decentralized in the first place, so that you don't have one central government central agency, which is basically what the government does. And therefore, by design, blockchain actually is supposed to be antithesis to this idea of a regulation. Because the whole idea is to create where we regulate ourselves. Yeah? We can create trust and we can trust each other without a central authority. So that actually brings trust issues of itself, because you're trying to regulate something that actually was designed so that you don't even regulate me, so that we can we too can transact with each other without having to have government, because we have other ways of ensuring. So that brings a challenge on itself. But obviously, it also brings many opportunities, and also it also creates certain challenges, because when we talk of technology, there's one thing about blockchain. First of all, by design, it's supposed to really try and not be regulated, so that it's self-regulated. And then the other thing is that it's kind of trying to change how we behave. Much as it is a technology itself, it's more of a social technology. It's really about changing behavior, which once you try to change how society behaves and how society works, it becomes political immediately. And that's why everybody cares about what's happening. And that's why you see a lot of talk around it, because there are many technologies, even in the 4IR, but blockchain gets huge attention because it's really a social technology. Once you try to change society, then it becomes political in a sense. And the other third thing about this technology is about how do we even define blockchain? Because when you talk of blockchain, and I think this has been alluded, there are all kinds of differing definitions of what blockchain is, because in its essence, it's really supposed to be distributed, totally independent. But now there are all kinds of variations of it. And even when the regulators are saying we are regulating blockchain, you really have to ask, there's no consensus right now, even among regulators, what is blockchain, which also brings about who regulates it even. Because if you look at in the US, FTC, the Federal Trade Commission, looks at it as a commodity, so it sees that it should regulate. If you look at security exchanges, security, it can be regulated under security. The tax authorities see it as an asset, can see how to regulate it. Yeah. So there are many people who can claim to want to regulate it. Even capital in Kenya, obviously, Capital Markets Authority also has been pointed out. There is also the aspect that we want. So again, all these people who have an interest in regulating also brings out these. The central banks are also there. So again, how do we create a framework for regulation? And I also want to tell you, Njogu, I think, Modhan, you had said something about maybe the growth of blockchain is being hampered by lack of regulation. Maybe I want to say, maybe it's the opposite, because the growth of M-Pesa grew because there was no regulation. Other countries in Africa actually failed, in Nigeria, is because they try to regulate, they try to make it as put it on a banking and so on, and they stifled it. And I think the approach to regulation has to be really careful, because sometimes if you really don't understand it properly, first of all, you don't have a good definition, then even the people who have a good skill, technical skills are not there. How can you regulate something you really don't know what it is? So I think these sandbox approaches obviously make sense. And I think we also have seen task forces. I think you have seen South Africa, they have established a task force. In Kenya, there was a blockchain task force. And this also starts helping you to start understanding. So, and I think, but obviously there's always the danger, as you can see in this, the more famous, the Bitcoin and other currencies. That's where obviously there's a huge danger of people getting invested, because it's like more like a gambling. You don't know whether it's gambling, because one day Elon Musk says something and you have lost 30% of your wealth. The next day he says something, you gain 20%. Really, this huge volatility makes some people really want to be concerned and maybe do something immediately. So there has to be, I don't know how you create a variable. Maybe the central bank have to be more worried, because it's a huge implications if people put all the assets there. And I think in Nigeria, I've seen that the central bank has really been very tough, because Nigeria is actually quite advanced. No, quite active. I think it's the fourth most active country in trading. And all kinds of people in Nigeria even are trading in Bitcoin. And again, also these technologies, they are also subversive in a way. Because you remember when Nigeria was doing this SARS, the problem where they had with the police and youth were rioting and so all over. And people, diaspora were funding the youth movement because people were rioting and so on and protesting against government. Government stopped payments to these young people by diaspora, and diaspora moved to Bitcoin to start paying for this. So in a way, they were able to circumvent the government in a way and say, okay, we will fund this revolution or this protest, but using Bitcoin, which obviously government has. So government in Nigeria has really been struggling with this. So again, those are some of the thoughts that as we try to think of how about this technology, how we should approach it as policymakers. These are some of my initial thoughts, but maybe I'll add on to this. But these are some of the things that I can start, maybe I can add on to this discussion for now.
Okay. Thank you. Rosalind, I think I like what Julia was saying, that the whole idea of having this, the blockchain technology, was so that we don't have really regulation on top of it. I think just coming back from 2009 when, the Bitcoin came into the space. But then again, we are trying to sort of have a disintermediation of the old financial system, trying to make it something new, and of course embracing the technology. Why would a regulator be so, we want to understand, why would a regulator want to come into the fore to regulate this, and it's not the technology, maybe the activities on the technology why would a regulator wish to come on board?
Right. As you consider the regulatory landscape, not just here but around the world, I think it's just really, as well pointed out, the fact that you have regulators looking at this space in with very different lenses, right? So one will say that we're regulating this as a commodity. Another will say it's simply payment, so it should follow the the finance act of that respective jurisdiction. Another is looking at it as something to be banned because it's a threat, and that's it, that they're not going to delve into that further. So as you've pointed out, yes, this technology by its design looks to disintermediate, which is just reducing or removing the role of the intermediary. Is that entirely positive? Both yes and no. It's only positive in cases whereby the community actually has a specific need that the government is not, or the regulator is not responding to, or there are not enough intermediaries looking into it, because within the realm of human needs and wants, even in economics, the needs and wants are really unlimited. But when we talk about a variable like demand, which is what someone is willing to pay for, then that introduces a different dynamic, that we may all want and need a payment gateway that's seamless, that that limits transaction costs, that is fast, doesn't have any downtime over the weekends or certain periods of time, and it serves the basic need of us doing business with each other, right? So if I put this within the context of us doing business, then yes, we will benefit and can benefit from platforms that enable peer-to-peer services, right? And then on the other hand, in the north, whereby governments should actually just quote unquote leave it be, or the laissez-faire approach, as it is in French culture, it's that let people transact, let people do business, let people gain traction, let people learn. And this is where now, if regulators then step back, they're able to study the trends. You can actually have real-time data in terms of what are people actually taking their money to, because when you consider both macro and microeconomics, it's that you should be able to establish trends from data. So as at now, you have a lot of data on, for instance, cryptocurrency trading, because it's publicly available on exchange platforms. But when you consider data on blockchain applications to do with registries, now the use cases to do with logistics, to do with transport, to do with identity verification, we don't have enough data, don't have enough communities on board using this, testing this out. We don't have statistics of investors who've actually put in funds to, or angel funds to, accelerators or to communities which have at least put out some of these initiatives. So the data disconnect really is where even for regulators, if I put myself, for instance, as a regulator, then I need that data to actually be able to decide what can I prioritize in terms of something that I will either incentivize or then ban. So it's a dilemma in the sense that we can easily say then that regulators should not step in, should not stifle, should not stop this, because it's unstoppable. In any case, the technology, advocates for some form of self-governance and self-regulation. However, in the real world, it's that you have several issues within human interaction and economics that may or may not favor that kind of self-governance and regulation, therefore calling for some form of regulatory protection to step in and actually introduce some measure of stability. Because if I even use cryptocurrencies as a point of discussion for this illustration, it's that you cannot stop an individual from using another platform to buy a cryptocurrency. But if they use this for fraudulent purposes, or in the case of like terrorism or drug financing, anti-money laundering, then there are platforms to actually trace them and bring them to book. So in that case, we can't tell regulators to quote unquote back off and let people do what they want, when in this case then you actually have a crime that has to be prosecuted within the legal frameworks of the day. So this is a bit of the dilemma that regulators will have to make provisions for the next decades.
May I intervene? You're mute, Mutoni.
Yes, kindly please proceed and
Yes.
introduce yourself. You are out in the
Yes,
introduction bandwagon.
my name is Dezoin Zangu. I'm an engineer, technology advisor, and I'm part of the same association as Violet, Rwanda Blockchain Association. But beside that, I'm also an advisor for the African Blockchain Institute. I could suggest maybe for the last quarter or 20 minutes left that maybe we could make the discussion a bit more dynamic by interacting with each other, and because we have a lot to say, and
Yes,
if we wait for each other to speak, it's gonna we will
take a
be
while.
talking just 5 minutes. I had just quick comments to make from what I've listened to for the past 30 minutes. To start with the last one, actually, with all my respect, I beg to disagree in terms of the data. We have a lot of data. The problem is that our data are siloed. So when you have data that you collect on paper or on Excel sheet or on centralized databases that are in the repository of the ministries, the agencies, or the companies, and there is no centralized system that will connect them together so that you can build insight from this, draw trends, predictive analytics, and so on. Then we end up in what we have in many African countries. We have data that we don't know what to do because we don't know where to find them. Personal anecdotes, I remember looking for data of manufacturing industry when I was working in Rwanda. I had to contact the authority that is responsible of all the companies that are doing manufacturing, and they shared with me an Excel sheet. And then when I needed some data about climate change, for example, I had to contact a development partner to get this data. And then when I need data about the demographics, I had to contact the ministry in charge. So long story short, we have data, but it just takes such a hassle to collect them that it's not worth it at the end of the day. And those who manage to get centralized, comprehensive data sets are our partners, international organizations that support and sponsor the initiatives to collect the data, to clean it, to put it together. Blockchain, in some ways, even though it's not the end, it could be the mean to solve that problem. The technology is proven now. Um, I I know I like to say it a lot, but I've been in that ecosystem. I mean, still young, I would say, compared to many who've been there for 10, 20 years. It was just in 2016. But back then, I remember we already heard regulators saying that we cannot, we need to wait and see how the technology is evolving. Then 2016, no, 2018 and 19, when I met Violet and I got in touch with the central banks and some other regulators. So they also said, let's wait and see. The sandbox that we have in many African countries, especially in East Africa, because it is one of the most dynamic regions in Africa. Sandbox have been there for a while. At first, we focused on the fintech. Now we're looking more seriously on blockchain. But the fact is that, with all the respect, we cannot keep on waiting forever because what we're trying to see, wait and see, China next year will come up with the CBDC, their own digital coin. They are planning to try it during the World Cup or I don't know the Olympic Games, something like that. Developed countries, America, Europe, are following now the trends. For a long time, they've waited also and seen, and now they realize that whether they want it or not, China is gonna drop its digital yuan. So now you hear the Eurobank, the ECB, who's trying to develop their own EU coin. You have Sweden who's trying to develop the e-krona. You have many countries. So indeed, we cannot regulate the technology, we cannot regulate the product of the technology, but if we don't start accelerating the process and having more African in the decision making and the product making, because at the moment, as our colleagues rightly said, Nigeria is the third trade market in the world in trading cryptos. But what is not written in the articles that talk about it is that none of these cryptos are made in Africa. We are big consumers the same way Europe and America have been big consumers of Asian products for decades, and now it is too late for developed countries. So how about learning from the mistakes of countries that are more developed than us and trying to leapfrog? I don't like the term, but the fact is that there is no other way for technologies like AI and blockchain. We can't wait and go through traditional development processes because by the time we'll get there, we'll be customer as we are now, but even more than that, we'll be eternally customers because the market will be filled. I do not believe that Bitcoin is the future of blockchain. Bitcoin is the future of cryptos, but for those who can afford it. And the reason why so many Africans know Bitcoin but don't know blockchain is because they can become rich with it. I mean, now it's too late. But if they would have bought one Bitcoin back in 2016, when it was less than $1,000, today they would have in their bank account $60,000. I myself denied and dismissed Bitcoin when I got into the ecosystem. And if there is one regret that I can have today is why didn't I buy it back in 2009 when at university my colleagues were talking about these cryptos that is used in the black web for the dark web for criminals, but at the same time doesn't cost even is cheaper than the cost of a coffee. I didn't. Then in 2016, I didn't either. And today, I'm trying to look at, okay, what cryptos can I invest in so that I can have enough money for my pension when my salary won't be enough to live properly. So these are the challenges that many African people are thinking of. Most of them actually won't even have a pension, by the way. I'm lucky enough to work in European countries or in US, but most of our citizens won't have a pension. And about the regulation and the fact that the market has been going up and down for since 2008. I can give a story of my father back in 92. I was actually born and raised in Central African Republic, so my mother tongue is French. And back then, we were still using the franc CFA. The franc CFA, for those who know history of Africa, has been halved back then in 92. So people who actually had 1,000 francs CFA, this was just worth 500 francs CFA afterwards, just because. Okay. Anyway, just because the central bank in France decided that it is not worth it. So I'm gonna stop here. I'm sorry for the long talk, but I kind of built up a lot of comments. I'm just trying to invite everyone here to try, because I'm a tech person. I'm not a regulator. I'm not a policymaker. I don't know anything about it. You are the expert, but we are counting on you to give us the platform to start building made in Africa blockchain products beyond the cryptos. But if we wait and see, we're gonna keep on being the consumer of someone else's technology.
Okay.
Probably I can maybe just
add on to it.
Just on to it is, yeah. What Israel said actually is quite important. And the whole idea, really, when we talk of regulation, obviously there are two aspects. You can do regulation because you are seeing danger, or you can use regulation as a tool to direct development, because as has been pointed out, it can be opportunity for leapfrogging. Again, I'll use the word, much as it's overused word. Yes, there are things that. So or did I mute it? Sorry,
yes,
kind of muted myself. So there are things that can be done that could be interesting in different ways with blockchain. And I gave one interesting example that I saw. I think in Ethiopia, there was and this unfortunately it's a Dutch company, was able to create a blockchain for coffee, so that if you're drinking a cup of coffee in a restaurant in Amsterdam or wherever, you could be able to tip the farmer, because you can trace it all to the farmer, so that once you pay the coffee, once you do your tip, you can decide who you want to tip, in the whole chain. So if you wanted to say this is a farmer, and the farmer gets the money. So it creates interesting ways. And I think also in Malawi, they're also trying to create a blockchain to do traceability system against to export. But I think the big thing is really how to think even bigger and more revolutionary. And I think that's why has brought an important point. If you think of CFA, they already have a common currency, obviously controlled by France and such. But nothing prevents them from actually come up with because if they're thinking of coming up with their own currency, also because they already have a union, let them just create a leapfrog and create this e-current, whatever, ECFA. They don't have to call it franc. I don't know why they need to call it franc. But I think there was something be called eco currency. I think ECOWAS was thinking of a currency called eco currency, and this can be interesting ways of starting the process. But obviously, once you start saying you have a currency regulated by a central authority, again you have moved from the whole idea of blockchain, which is supposed to be decentralized. And as they say, this becomes the issues of definition, because you have to ask yourself, what does the blockchain mean that you have to be fully decentralized, which means that then you cannot talk of a currency controlled by a central authority. But it doesn't matter really. The whole idea is to use the technology. The whole idea is to use a technology to see what you can do with it. Definition, I don't think matters a lot, but there are many ways of using and leveraging these technologies in many interesting ways. And I wonder, and I think the regulators here are the ones who can tell us, yes, we can do all these sandboxes and all these other things, but the whole idea is that what matters is really the philosophy behind regulating. Is it because you are afraid of danger, or is it because you want to direct so that you can go into certain transformative ways? And I think that is a paradigm shift that you need to understand, because regulation always comes about danger. So we are trying to see where we can stop things, as opposed to understanding opportunity. And we as regulators is really to understand how can we help all these innovation to build this powerful innovation system that can start trying to do what Desiree has said, leapfrogging on other things. Yeah, maybe I stop here.
All right. Thank you so much. I'm looking at the time, and we're also a bit shy of that. In just 2 minutes, I think Yanga, you had a point to make, and after that, 2 minutes for everyone to give us what has been that connection now that we have understood what the technology, the potential it has in terms of cross-border trade, and also as well looking from where you are at, what are the short-term, medium-term, and long-term in terms of policy towards this particular technology. Thank you. Anybody?
Thank you so much, Muthoni. I just wanted to intervene and just say this. And I've been in these discussions for a very long time in our sandbox, and also as we interact with fintechs. When we talk about blockchain, we always bring in cryptocurrency in the same discussion. Is there a way we can delink the two? Because they're delinkable. Cryptocurrency is a product of blockchain. Blockchain has so many other test cases and use cases on earth. You can name them. The problem that we have with fintechs and many innovators, we don't want to differentiate blockchain and cryptocurrency. So even in this discussion we have had, we have been talking about blockchain and cryptocurrencies interchangeably. Yeah, and that is the problem. Because if you talk about regulating, then blockchain does not come anywhere near. Why do you want a regulator to regulate blockchain? I mean, it's a technology. Why should it be regulated? So people keep on talking about regulators are not accommodative. They're not regulating this technology. But why should the Capital Markets Authority regulate blockchain? We have no business regulating blockchain. Our role is regulating that particular product, which is using the blockchain or another technology. So we're looking at the products. Is it a license you want? Is it a standard product? What service are you offering in the capital market space, irrespective of the technology that is behind it? So you'll find that many people bring this issue of regulators are not regulating this technology. It needs to be, but it's not in the business of a regulator to regulate the technology. Regulators regulate the participants or the products. Now, when you talk about if you delink blockchain and cryptocurrency, then look at cryptocurrency as a product. It's a currency. So the central banks then look at it as a currency. Now, as a currency, they define currency in their own definitions, which they need now to think more and see how to do that. But then, is it meeting the median of exchange, store of value? What about monetary and fiscal policies and all those things? Then you have that broader discussion about what a currency needs to have. So I think, Muthoni, the more we discuss about this, the more it needs to be more clear about everybody in the discussion that there needs to be total delinkages between blockchain and cryptocurrency. And the more we talk about blockchain, there are so many use cases in our sandbox. We interact with quite a number, so many which can add a lot of value. But we over-concentrate on Bitcoin and cryptocurrencies, and we lose the point. Thank you, Muthoni.
All right. Thank you so much, Yanga. Anyone else would like to chime in terms of that connection between trade now, the facilitation of the cross-border trade, and of course now the technology that comes in with it? And here we're not talking about the crypto, here we're talking about the technology.
Yes, and my point, just in agreement with Yanga's thoughts, is that we cannot just look at technology for technology's sake. Tech is an enabler. Therefore, my view on the regulatory landscape is that we should look to empower businesses, especially looking at within and post pandemic recovery, because a lot of people will be interested then in how can I get my product, my produce to other countries without looking at so many fees in between, the levies, the customs, the all these taxes and all these fees that I have to pay as especially as a small medium enterprise, right? So we need to bring and drive the conversation back to businesses and communities. What are we doing to empower them? What are we doing to actually show them that there are new opportunities, right? So this is where the conversation has to shift, so that then tech becomes the enabler to what people are already doing, or at least trying to achieve, so that it's not trying to understand which technology, which aspect of this technology are you using, has it been banned, has it been accepted, is it technically feasible? No, we are actually going to spend too much time that we don't have as a luxury in terms of especially economic recovery within and post the pandemic.
Anyone else kindly chime in? We only have a few minutes, so you will each get a minute.
Can I come in?
Kindly.
Yeah. Okay. So I believe one thing we need to actually consider in the overall discussion of regulating beats the technology, the use cases related to the technology, or the currency part of it, cryptocurrency or Bitcoin or any of the currencies in that realm. Generally speaking, I think the overall advocacy that we need to do towards regulation has to actually be, the regulatory framework has to actually be open, flexible enough, and has to be really receptive towards new technologies, be it cryptocurrencies or whatever technology that's going to come in the future. I think we need to advocate for a regulatory framework that's really open enough and really responsive, and as much as possible really courageous enough to kind of try out new instruments of regulation. That seems to be what I see lacking, be it from the side of central banks or from the side of mainstream technology regulation institutions, ministries and agencies. How I see that, generally speaking, that they operate in that framework of very traditional static regulatory framework that's not really open and flexible enough to kind of create opportunities for new technologies, and really is open enough to kind of taste new tools and instruments of regulation. I think the overall advocacy that all of us we need to do is, our regulatory frameworks have to actually get away from that static and very traditional framework into a more dynamic, open, and flexible enough that really embraces whatever technology is coming in the way that could actually solve the many challenges that we have in our society.
Thank you.
I just
Yes,
wanted
Violet.
to chime in as well, and I'm mainly sort of like alluding to what everyone has said. I think for the National Bank, there's been a lot of association of the technology with the cryptocurrency, and as we know, there's a lot of challenges, I would say, that they're currently facing, because currently there's an ongoing study in which they're trying to explore the opportunities and the challenges of a CBDC, or even applying the technology in different other sectors in the financial sector. And there's a lot of, yes, as I mentioned earlier, there's a lot of association of the technology with the cryptocurrency, and that's mainly what hinders the growth of the technology alone. Because I believe there's the payment companies that can that have built the products on blockchain, but some of them, after they've been tested in the sandbox, they are the fact that they're built on the blockchain and then they hear it's associated with cryptocurrencies, they drop them. So yeah, I think there's a need to bring awareness of the fact that the technology is not the product. you can use the technology in different other sectors, and you reap the benefits of the technology without associating it with the product.
Thank you. I think we only have about 4 minutes. Closing remarks from each one of you in terms of where do we see ourselves in the next years to come within the regulative space. 1 minute each.
May I start? 1 minute.
Yes.
I won't get too technical, but I think the future that I see is a combination of artificial intelligence and blockchain through what we call distributed autonomous organization or decentralized. So basically blockchain that are autonomously run using artificial intelligence. So whether we apply it or not, the technology is gonna evolve, the technology is gonna become more complex, and the future from where I stand is in East Asia when it comes to technology implementation. However, Africa is the biggest market of the second half of the century. So Asian companies, Asian government already looking at Africa as potential markets. How do we do the shift so that we can turn from consumer to producer, either by enabling the people who have the talent on our continent to be able to contribute to that technology, or if we don't, if we are afraid for whatever reason, which are very valid, we will then let this trend pass. And there might not be another opportunity that will come before 1 or 200 years. So once again, I invite our experts, regulator, policymaker, to work hand in hand with the entrepreneur and the innovators, because they are those together who will manage to come up to something where Africa can finally take a share of this big opportunity. Blockchain is not cryptocurrencies, absolutely, but both can be utilized for the future of our continent.
Thank you. Julius, one final remark? Or Yale? Yale?
I can say something. Yes. For me, yeah, and I think that been raised, obviously, blockchain prevents interesting opportunity. But from where I've been working from, which is really thinking about how to transform economies and how to use technologies as a driver of transformation. Really, how we can start thinking of blockchain as a way to energize certain transformation pathways. We are thinking of agriculture-driven transformation, whatever services, modernizing services, and so on. Significant opportunities exist. As I said, obviously you can use it for traceability system and so on. And this is now where we start thinking then what role does regulation play? Because as I said, in our report, we found a quite significant element of not being ready in terms of skills, in terms of infrastructure, in terms of innovation, creating the necessary innovation ecosystem. And I think even regulators can play a big role in helping to support this, trying to understand how do we build our infrastructure, how do we build our skills, and so on. And some of these sandboxes can be useful platforms. And I'm actually in Kenya, I'm working on a project to bring together, to develop an innovation platform that can bring industry and universities together and start creating innovations, open innovation systems. And I think this is one area that probably can start helping, creating innovation platforms that start bringing different stakeholders together so that they can think more creative or create solutions. And I think this is where the sandbox approaches, as Nyale has said, has described what they're trying to do, obviously points away to starting that pathway. And I think this is how we really try to think, how does regulator work creatively with other people, universities, industry, and so on, to co-create solutions. Thank you.
All right, thank you. Yanga and Rosalind, one final point remark, and then we can wind it up.
Yeah, thank you, Madhoni, and thank you for having this session. So one, from the Kenyan side, of course, our sandbox is live. We have done 2 years now, and we encourage everybody who has an innovation in the capital market space to come and test it in our sandbox. We have been receiving applications from all over the world. It's not just Kenyan companies. So as we stand out of the 8, now 10 companies which will be in the sandbox, we have like 3 or 4 of them which are not Kenyan, others coming all the way from Abu Dhabi, others in the UK, and others in other countries. So it's a sandbox which is open to all participants across the world. Number 2, it's also linked to the Global Financial Innovation Network, GFIN. So we are members of that network, and so we interact and present opportunities to all applicants to the whole world in terms of scaling their businesses to scale. Number three, just to point out that our regulation is very flexible. Actually, we have the powers to issue notices, guidelines to accommodate any type of product that is not being catered for by the current regulatory framework that is already in place. So it's quite a stretchable piece of legislation. And finally, most importantly, is that regulators have to work together with the industry. And innovators sometimes fear government, and it's for obvious reasons. But the most important thing is to see how do you handhold some of these fintech companies, some of these ideas. Sometimes these ideas have to be panel beated a bit so that then they fit the capital market space or the financial services sector, and that is important. So let's continue this dialogue. Let's partnering because that is what will hold into the future. Thank you so much. And I
Thank you
think
so much.
for Ume, I will share with you our 2 years now Sandbox milestones report. Maybe you can share to the participants. We have documented our report in terms of the challenges, opportunities that we have had in the last 2 years of operation. Thank you.
Thank you. Rosalind, so that we can wind it up, make it short and sweet.
All right, thank you. Mine is the threefold call to action. First, to our listeners, if you're an individual, be in the space. Do not fear or shy away from the complexities. This is the best time possible that you have to learn. To regulators, as Africa, we stand to unlock at least $2 trillion in value by just embracing and implementing the on rails and off rails for emerging technology, not just blockchain, but artificial intelligence. So the question is, what will stop us from capitalizing and from realizing this whole $2 trillion economy? And thirdly, is let's shift away from extractive models of engaging with the business environment to creative models. So the question is, how do we enable a whole continent that's ready to do business to indeed unlock this $2 trillion of value? Thank you.
Thank you so much, everyone, for being a very interactive panel. I think in conclusion, we can say that this is a multi-stakeholderism aspect where every person is supposed to come on the table so that we can continue with this discussion. Thank you so much, and have a good afternoon or good morning where you are. Thank you. Bye-bye.
Bye. Thank you.
Thank you.
Bye bye.
Bye.
Thank you. Bye bye.